Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/thesmattering, to get access to the 10 best stocks to buy right now. We're going to keep things going with our mini series here on stocks that you'll want to own if there's a bull market in 2023. I've said it a couple times already. I'm going to say it again. We don't know if that's going to happen. There are concerns, macroeconomic concerns. There are concerns about inflation and recession continuing to squeeze the consumer. I'm optimistic that if we look back a year from now, investors will be really happy to have held their investments. I'm Jason Hall. This is The Smattering. We're going to talk about one of my favorite banks and fintech companies up here next. I got Jeff Santoro with me. Hey, Jeff.
Hey, Jason. Yeah, SoFi is what we're going to talk about today, one that I'm not as familiar with. So I'm interested to dive into this one and hear why you think it's one that we should have in our portfolios if 2023 is a bull market.
Well, as a starting point, SoFi is still dealing with kind of the stench, I think is the best way to put it, of having gone public via a SPAC. Needless to say, SPACs over the past couple of years have been in aggregate absolutely awful investments, not just losing to the market, but losing investors a lot of money. That's been the case for SoFi as well. Now, SoFi's business it's a fintech, and it's become a bank now. It actually has a bank charter. It acquired a bank last year. The thesis has changed over the past year or so from more of an asset light model to really being the full bank with a bank balance sheet with the deposits and the loans and all the things on the liability side of that, where you've got the assets that generate income, but the liabilities, you got to give people their deposits back, and you have all the risks of those loans. And frankly, I think a couple things have happened, Jeff. It's hard to evaluate what's the business really worth. They're burning cash as they're trying to really spend a lot to get to scale. And it's hard to figure out, well, what's the fintech stuff like Galileo worth versus what's the value of the bank business, and then what's the risk of the bank business?
Well, you hit on something that I'm wondering about SoFi, just a little I followed it, is what do you think the risks are in 2023, even if we have a bull market? And why do you think that it's still worth owning even with those risks?
It's interesting because the risks are also really heavily tied to the opportunity. So SoFi became a bank to get the bank out of the middle because it makes it more expensive to try to acquire customers and to acquire deposits. By becoming the bank, you kind of set your own rates, and you don't have to pay that cut to the bank. So it's far more cost effective to do that. The flip side of it is once you fully become the bank, again, you're exposed to all of the risks of the assets as well. And for SoFi, a lot of focus gets put on student loans because of the loan payment moratorium and all the stuff from during the pandemic. But the big risk really is if you look at its loan book, personal loans. These are typically unsecured, right? So if we do go into a recession, the first two buckets of debt that people start to make late payments and miss their payments and then default on are credit cards and unsecured personal loans, because there's nothing to repossess, Jeff. So as a result, right now, this is a stock that trades for right about book value. But again, we have that Galileo, that fintech part of its business. It's hiding how much the book value of the bank itself is being discounted. So all of that to say, Jeff, if we get through 2023, we don't have a deep recession. And I think if we see a bull run with the stock market, that means that we get through unscathed. That means that SoFi has avoided a lot of those credit losses that come along with recession when you have the kind of loan book that it does. The flip of that means that it will have continued to be able to aggressively grow, and it's probably going to be an even more diverse bank when that happens, and even closer to generating the kind of profitability that it can generate at scale.